idea about this one that much. Otherwise, yeah, this doesn't have to be really perfect, but you just have to give us an idea of what to expect. Which this is not supposed to be a line, but instead is on. So we have a dry zone that covers the all of that, or that touches all of that. And you can make this actually, you could make this a little skinny. So if you look at this point, you'll see that we are sitting right at that, almost not quite inside here, but right almost one slide move will get us there. But then once we hit that, we'll have to make a turn to this level or break through completely to the upside. So expects that. As of now, there's not really enough information. We could put that to be, expect that to be our high of all time, in time as time goes. But really, we're not expecting a lot. This could just come and stop right here, and then bounce off completely off to the upside. 4 hours. Okay, 4 hours has that doji which is from up, which indicates a slight pullback to the downside. In the 4 hours, you see that we actually did touch that. We hugged that a little bit. We're not in the zone yet, but we have hugged the zone. So there's a possibility of this in general to reverse from right there a little bit. Not a lot of, don't expect a lot, just a slight piece of pie will do. If we put our chart into a regular traditional chart, you'll see what's going on here. In 4 hours, we have the doji over there, we have a break to the downside which is starting to form up, so we should expect something to happen in between there that will give us that clear direction of where to go. But I think there's some slight pullback which is going to happen right around there, and the same thing should apply to the giant that everybody has been talking about. I already did some analysis around this, and let's get a little bit back on the Aikanashi. You will see that on the Aikanashi we do have, when people were so worried, we do have this level here which we had drawn, and if we put that on the daily chart, of course, reset that, you'll see that yeah, we came and hugged this, and then we started going back up, and because we're going back up, we are still actually going back up until because we're quite far from that previous swing high. So until we get around that previous swing high, then that's when we will be able to turn around. But until then, we do not have a lot yet to worry about, because looking at the moving average down here, the moving average is just starting to turn green, which is a good sign. It's a good sign for bullish momentum. But also at the same time, the candles themselves, if you look at the candles, the first three, those three candles starting from the one that ended, they all have no bottom wick, okay, and because of that, that just indicates a strong bullish momentum. Pretty beautiful thing here. So you still have a lot of chance to play your call option and all that, and still be able to profit from it. Normally what I would do is you get these dojis you buy a week out, which a week out from the dojis here, after the doji changes color, would be, say for example, you came here, you get this doji that changes color, you buy after or the day after, which is a week out. That would be 1, 2, 3, 4, 5, 6, 7. That would have taken you right over there. And then same thing here, doji changes color, you buy a week out, 1, 2, 3, 4, 5, 6, 7. That would have taken you all the way over here. Doji changes color, 1, 2, 3, 4, 5, 6, 7. That would, so there's still 4 days left to get around that higher high. Then the doji will change color again, do the same thing, rinse, lather, repeat, over and over. So that is actually, yeah, that is quite very very powerful. You can do a lot with that normally. Yeah, if you have it's just a simple strategy. You wait for price to bounce off the trend line. You either trade the trend line or you trade the support. You can trade the support, but sometimes the support, it's if the market is not really sideways, the support is not very accurate. If the market is a little more sideways, the support is quite accurate, because then you know when to expect price reversal, and when to expect all those other trailing, not actually trailing, but trending days. Okay, so you will have those moments really highlighted for you, which makes it easy on sideways markets. But other than that, yeah, you should be good to play either way. That works for you. It's always just a game of patience and wait. You just have to wait a little bit to be able to gain a little bit. But yeah, that's about that. If we take a look at another security here, which I don't know which one that would be. That would probably be, let's say, Google. If we take a look at Google, we'll have a trend line running from here. That's actually almost a perfect trend line. Okay, we have touching here, touching here, touching there. Those are our key levels, and you should see that Google is just starting to bounce off for a call options here. So meaning that actually that was a line that I drew a long time ago. I'm gonna go ahead and delete that. Yes, remove locked drawings. That's okay. But yeah, so we would buy a call here, intending for a week out, which a week out would probably bring us around. If we measure, we can do a measurement here, which is this far. Not 41 days. A week out, 19 days. No. Actually, I started it from a wrong spot, so I gotta go ahead and restart. Starting from here. Okay. Why does it say 22 days, 15 days, 9 days, 8 days, 6 days? Let's say 6 days right here. Okay, let's say 6 days right there, which would be a 9% move, considering that at least Go is moving 1.8% a day, or around 2% a day. So that would give us around 9 days for those 4 bars. It doesn't make sense, 4 bars for 6 days. But remember, we do have this gap here, which is accounting for another day. So that would make sense. We have that. But yeah, you would have that over there, and that will be your target profit over there. Just right around here where I drew that white line. I normally don't use that. I don't know why I did, but let's do this right there. That would be your take profit. Simply because that actually corresponds to, not only does it correspond to this, that also correspond to this, that also correspond to this. You know, if we look at these levels clearly on an actual traditional chart, you'll see that price came down, stopped around here, which this became support at that time, and bounced off. And because it was a support, it became a resistance when price started going up here, and it's gonna be a support again. Same story over here. There was a little bit of a resistance around here, but that was short-lived. So yeah, this is how you read charts. You don't really need to do a lot of stressful work around. You can read articles and things like that to improve your knowledge and increase your understanding. But when it comes to basic things, the basic things, you just have to think a little bit more. What would really happen? So yeah, in this case, if we take a look further or deeper into what's going on here, you will see that the chart here is sitting at a trend line, which is of course a good buying point. So you just buy a call option, which is way out, and you should be good to go for a little more. And if decide to drop a little bit, it shouldn't be that bad. So yeah, that would be a good play. That would be a really good play, in my opinion. Yeah, and of course you see how the gapping is happening. We have a fair value gap, which is the top of this to the bottom of that. Let's call that. Let's use that for now, which means if prices to drop down, it will come and test this gap here, and because of that, we can leverage around that, and just as you can see, you will note that that is the tip of the previous. That's the tip of the previous candle, which is technically the wick of the doji. Okay, and that wick of the doji just becomes the region that has to be respected a little bit. Okay. Anyways, I hope you guys have a good day, and I think for now we'll stop here.